talks of a recession starting to heat up, what does that mean for the Orange County housing market? And on top of that, what can you expect in general to happen over the next couple weeks? Well, that's exactly what we're going to be talking about on today's episode when I go over my Orange County housing market forecast for the month of April. So let's go ahead and get into it. Okay, so before we get to some of the recession data, let's go ahead and talk about what's happening in the Orange County housing market right now, in case you're thinking of entering the market anytime soon. So the first thing I want to talk about is how many homes buyers have to choose from right now. And buyers, this is some great news for you, because right now there's a little over 3,600 homes on the market in Orange County. Just to give you some context, over the last couple years, around this time of year, we only had about 1,700 to 2,100 homes on the market. So we have more than 1,000 more homes to choose from today than we did this time over the last couple years, which is great news for buyers because you just have more options out there when you're looking to purchase a home. Now, if you look at the demand side of things, in the month of March, we closed a little bit less than 1,800 homes. The prior month, we closed a little bit less than 1,500 homes. So demand is starting to pick up as we're heading through the spring season as well. So this has all led to a pretty balanced market. So just to give you a quick example of this, if you look at the last 500 homes sold in Orange County, 52% of them sold for at or above asking price, and 48% sold below. So it's a pretty even mix. Now, compared to last month, it was at 50-50, so it went up a little bit, but really not that noticeable. Now, if you're looking at the selling side of things in terms of how fast is my home going to sell if I put it on the market right now, that's also starting to speed up as well. So over the last month, about 54% of homes went into escrow in less than 2 weeks, and 72% of homes went into escrow in less than a month. Now, this is about a 5% increase over the prior month. So again, as expected, as we head further into the spring market. But on the positive side of things, right now, we're in a pretty balanced market in Orange County, which we haven't been able to say for a while. So buyers have a lot more homes to choose from. There's just different options out there all over the place. And on the selling side of things, yes, you're going to have to be a little bit more patient. You're not getting 10 offers coming in the first weekend anymore. However, if your home is move-in ready, in a good neighborhood, and priced correctly, there's a good chance that you can get your home into escrow in about a month. And that's also shown in the data. Right now, in the beginning of April, the median days on market is about 28 days, or if you look at the beginning of March, it was at 35 days. So we've seen a slight increase in how fast the market is moving. So we are starting to see things heat up slightly, but we're still closer to a balanced market than a seller's market. So it's just a healthy overall market for both buyers and sellers right now. Okay, and then the final thing I want to talk about is interest rates, because we have been on a wild ride over the last week in terms of what rates are doing. So at the end of March, we were hovering right around 6.8% for interest rates, but ever since these new set of tariffs were announced, we've seen interest rates plummet to the 6.5. So we've seen almost a quarter point drop over just the last week alone, which is not something you typically see in the housing market. So this is great news for buyers because it increases your affordability pretty significantly. So really now the biggest question that needs to be answered, is this going to be a temporary thing and are rates going to go back up after the market's done reacting to these new tariffs next week? Or are we going to see these lower rates sustained for a couple weeks? That is really going to determine what the housing market is going to do looking forward to the rest of April. So if we have interest rates that stay in the 6.5, 6.6 range, anticipate more buyers entering the market, starting to get rid of some of that excess inventory that we've built up and heating up the market a little bit more. However, if we see interest rates shoot back up to 6.7, 6.8 again sometime in the next week, you can kind of expect a housing market similar to what it has been over the last 2 months, which is pretty balanced, where you don't have a giant advantage as both a buyer or a seller right now. So really that's going to be the thing that you want to pay attention to, because that's really going to dictate what's going to happen the rest of the month. So you now might be asking yourself, what do tariffs have to do with 30-year mortgages? Well, without going into a bunch of details and making it as simple as possible, basically, anytime you see any type of uncertainty and fear in the market, people tend to pull money out of more risky investments like stocks and put them into more safe investments like bonds, specifically the 10-year treasury bond. Now, the reason this is important is when you have a bunch of people going out buying these bonds, those bond percentages tend to start going down. And the 30-year fixed mortgage is very closely tied to the 10-year treasury bond. So when the 10-year treasury bond starts to go down, 30-year fixed mortgages tend to go down as well. So over the next couple weeks, if we see more countries start to put additional tariffs on the US, creating more uncertainty and fear in the market, that can continue driving bond prices down, which will in turn continue to drive 30-year fixed mortgages down. However, if this is just a negotiating tactic and eventually new deals are worked out pretty quickly where these tariffs are starting to be lifted, then you can expect those 10-year treasury bonds to go up again as well as 30-year fixed mortgages. So you're going to want to pay pretty close attention to what's happening with this tariff situation, who's putting tariffs on who, because the more tariffs you see, the more likely you're going to see those interest rates start to creep farther down. So this brings us to the last topic I want to discuss today, which is recession, because since those tariffs have been announced, the talks of a possible recession have definitely gone up. So what actually happens to a housing market during a recession? Let's go ahead and look at the data. So if you look at this chart right here, it shows you over the last 6 recessions what home prices have done. Now for the 2008 recession, because that one was caused by the housing market, I tend to discount that one. But if you look at the others, 4 of the last 5 recessions that we've had, home prices have actually gone up. Now that might sound counterintuitive and a little bit strange, but the reason why is because typically during a recession, people are spending less and the government has to stimulate spending by lowering interest rates. Now when interest rates start going down, again, that's eventually going to impact mortgage rates as well. So mortgage rates start going down, getting more buyers into the market and spurring activity. And because of that, you start seeing multiple offers again and home prices going up a little bit quicker. Now, if we were to go into a recession, do I expect interest rates to plummet back down to the 2 and 3% that we saw during COVID? No. However, based on just last September when we had interest rates even in the low 6s, buyer demand exploded at that time and we started having multiple offers again. So if we saw interest rates start going down at 6% or below, there's a very good chance you're going to see the market start heating up, prices go up a lot quicker, and getting to a point where the market starts to come unbalanced again, where sellers have more of an advantage because there's just a lot of buyers trying to jump on the opportunity of those lower interest rates. So yes, people do lose jobs during a recession, so not everybody's going to be able to purchase. However, based on the current data we have, especially around Southern California, the chances of any type of giant unemployment happening in this area are pretty small. So the most likely scenarios are going to have more buyers than there are sellers until those interest rates start to go back up again, increasing home prices and unfortunately making it harder and harder for the next couple years to be able to purchase a home, especially as rates start to go back up after the recession is over. Now, a recession is still far from guaranteed, so we don't have the data showing that we're definitely going into one. However, it's still good to know what's the most likely thing to happen in the housing market if we do start seeing a recession happen in the United States, so you can be prepared for it and be able to take advantage of those lower rates if we start seeing those recession indicators lighting up. Now, if you're a buyer sitting on the sidelines thinking, okay, well, I'm just going to wait to see what happens to those interest rates do go down, also realize that there's a lot of other people in the same boat. When interest rates go down, competition is going to heat up, and now you're going to be in a spot where you're competing with multiple buyers trying to get into a home. If you're able to purchase a home right now and can comfortably afford it, which I know is not a lot of buyers right now based on the current prices and interest rates, but if you can secure that home. And if we do get into a recession or interest rates do continue to drop, you can always refinance that home later, reduce your mortgage rate, but you have that price of your home already locked in and you don't have to worry about competing with a bunch of other buyers. So if you are thinking of buying a home, the first step you should always be doing is talking to a lender. It's completely free. It's not going to impact your credit score if they do a soft pull on it, but that way they're going to be able to sit down with you, look at the numbers, and you're going to have a pretty good indication if you're ready to buy a home, or maybe you have to wait a little bit longer, but you'll never know until you sit down with the lender to find out that information. So that's always going to be your first step. Now, if you have any other questions about the housing market, whether it's buying, selling, investing, and you want to have a more one-on-one personal conversation based on your specific situation, feel free to check the link below where you can access my calendar, set up a 15-minute discovery call, and we can go over any questions you might have to give you some clarity on what direction might be best for you. And if you are thinking of buying a home soon, this video right here will tell you how to get a better interest rate in today's environment. And this one will go over all the information you need to know about the new agent commission structure and how that impacts buyers. So until next time, stay happy, stay healthy, and I'll see you on the next show. Bye, everybody.